Hey everybody, I am Sami Abusaad, Director of Education at T3 Live. Welcome to today's video. It is said that when written in Chinese, the word crisis is composed of two characters. One represents danger and the other represents opportunity. Actually, John F. Kennedy said that. Now, I don't know if that's totally true or not, but I sure as heck know it is the case in trading. When I scan in the pre-market, I look for stocks where I know traders got caught. They got trapped. How do I know they got trapped? It's simple. Look for gaps that go against overnight gaps, like the Xilinx here, that go against yesterday's candles. So Xilinx has been probably the single most bullish stock in the country, right? And it's been up, right? Last 2 days, the market traders bought the stock expecting it to gap up, obviously. How do I know they're expecting it to gap up? Would they have bought it if they expected it to gap down? No, they wouldn't have bought it. They would have actually sold it. They would have shorted it or sold out their position. Instead, they bought it into earnings, and today, Xilinx gapped down. Now, not only was the Xilinx a really, really good gap down because it gapped against the last two bars, it also gapped down under the trend or the trend line. See this? It broke under that long-term trend, which gave reason for even long-term traders to finally get out of it. I don't know if you read How I Made $2 Million in the Stock Market by Nicholas Darvis, I think is his name, or Nicholas Darvis, I believe. That was how he used to trail his position once the stock actually broke under a significant pivot. He called it the box theory, when the stock made higher boxes or higher pivots. So even long-term traders had reason to get out of it, but really the main thing to understand, if you really truly want to understand the concept of trapped traders, is to understand what happened here and to see to understand the ramifications of it for the next day, right? So again, the stock has been up a lot over the past months, just up so much, right? You can look at them. If we look at the monthly chart, you'll see it even more. Look at this, way up here. It was at 140 last night. Okay, very extended. That's the monthly chart. Here's the weekly also, way up. And right into earnings, traders thought, okay, well, this is the strongest stock in the country. It's probably gonna do well on earnings, and they bought it. And the next day, it gapped down, or overnight, it gapped down. Now, put yourself in their shoes. How are you, if you were in this stock, how would you feel? How would you feel? You wake up and then you're sitting on, who knows, 1,000, 2,000, 5,000, 200,000, depending on your size. I mean, I'm sure some hedge fund managers were sitting on $1 million+ losses today, okay, right at the open. Think about how they would feel, how you would feel if you were in their shoes. You'd feel trapped. You'd feel like you got your head handed to you, right? And so what do you do at the open? Most likely you would sell. You would actually start liquidating the position. If you're a hedge fund manager with tens or hundreds of thousands of shares, you may do it gradually. If you're a small trader with a few hundred shares, maybe all in one shot at the open, all in one order at the open. But sooner or later, everybody basically gets out. The majority of traders that want to get out eventually get out. And what happens is, the beautiful thing is, some traders at the open might not get out right at the open. They might say, well, it's down 10%. Let's see if the stock can bounce a little bit. Okay. And but they're down, let's just say down $2,000. And they say, okay, let's see if it bounces a little bit, and then I'll sell once it bounces up a little bit. But instead of bouncing, it starts to drop. Now their loss grows, gets bigger. So it goes from 2,000, now it's 2,500, now it's 3,000, now it's 35. The bigger the loss, the more pressured they feel to get out, right? When they get out, that puts pressure on the stock to drop more. When it drops more, the ones that are still holding on to the stock, their loss is getting bigger and bigger also. And they feel the same thing. They start feeling, okay, I was down whatever, $1,000 at the open. Now I'm down 1,500. Now I'm down $2,000. I better get out. They get out. It again, that's supply coming on the market. It puts it forces the prices lower, and it starts the snowball effect. As the stock drops, other people are now also, their losses are growing. They get out. It leads to lower prices. And lo and behold, the stock drops, I don't know how many dollars today, right? $10, $11 actually from high to low, and closes at the lows because of that snowball effect that I'm talking about. Now, if you know what you're looking for, then you can, if you know what you're looking for, then pre-market, you basically know what you're going to do at the open. Pre-market, I know what I'm going to do at the open. I scan for the gaps list, especially during earnings season. Now we have a lot of gaps, but I scan for the gaps list every single day. I post it in the room around 8:30 East Coast time. I also post the favorites in the room, in the pre-market, alerting every room member that this is what I'm going to be, these are the symbols that I'm going to be focusing on. Typically just a few, just three, maybe gap ups, three gap downs at the most. Um, and Xilinx was number one today. So right at the open, we had a play on it. I had a call on it under the 1 minute bars low, right at the open basically. As soon as it took out 125, I believe it was 125, just under 125, stop 126.60. As soon as I got in it, bam, big drop. I got out of half in this tail. A little too soon, I know, but got out of half, and I managed the back half to the low of the day, to 115.80 was the exit, or 115.77. But not only that, this is the kind of gap that I know closes at the low of the day most of the time. This was just protecting the morning gains. Okay, I had 1,300 bucks in it at the open. But check this out. After I got out of it, it set up again short. So here it is, a breakdown, short under 119.50, I believe, or 119.80. Here I have the calls from this morning's calls. I take a picture of every day's calls. Xilinx 119.25. That's the first call. Okay, short. Xilinx 119.80 by 121.75. Target low of the day, and then the exit for the back half. Reach target one, reach target two. Look at that. Right at the end of the day at that's 2:37 East Coast time, 11 at 115.80. So very, very nice trade. But the truth is this like a one-off thing? No, the answer is this is exactly what I look for every single day. I may not find it every day. I may not find something of this quality, but I find similar trades to this almost every day. Now that we're starting earnings season, we're actually this is the first week. I mean, the first uh, solid week of earnings. Some of the big names are reporting. Today we had Microsoft, Facebook. Tonight we have Intel, Amazon, right? And after hours. So this is kind of the first week of solid earnings. We're going to see more of this for the next 30 days. I mean, every day almost. Xilinx also was traded last quarter, last earnings season. Notice two red bars, so traders actually sold it into earnings. So this was my very first earnings trade last quarter. They sold it, and then the next day gapped up. So it's the opposite. Now the traders that sold it, that shorted it into earnings, are trapped. They're going to look to cover, which pushes the stock higher, right? As the stock goes higher, traders are now forced to cover to minimize their losses, of course. As they cover, the stock rallies some more, and and again the snowball effect, right? So that's what I love about gaps, and that's what I do in the room every day. I traded other things. I mean, here's all the calls for today, a bunch of other things today. The biggest play was, I think, the Xilinx, because I did it twice. So a bunch of calls. I did the LKQ, was nice. Ifan had a call on it in the morning, which worked out beautifully. I had another call on it in the afternoon, which worked out nicely. Also did the CNSL or something like this. CNSL, short, 5 cent stop. This was amazing at 10:59 a.m. I'm actually not logged into my platform, but I'm going to go ahead and log in right now. So here it is. I'm just going to log in to show you what I did. So I just logging in right now as I'm speaking. CNSL was also nice because it had a tight stop, and it was also a gap. Now CNSL has a different kind of psychology behind it, but just think about it like this. It wasn't short-term traders, it was long-term traders that got hurt. A lot of the recent traders that were in the stock got out of it, but check this out. The entire year so far of worth of traders were now trapped. It gapped under all of that, under this base from the past 4 or 5 months, because it started last year. So that's what led to lower prices. Sometimes if the gap isn't very, very clear, you can still, so here's my P&L, you can still, you don't have to take action at the open. You can look at it for, you can do it later on. Don't have to do it at the open. And the CNSL was not done at the open, it was done at 11 o'clock. I had a couple of losing trades too, 3 I believe. The VC, which was a Climo that failed, climactic buy setup. The Xilinx is right here, 3,100 bucks. Thank you very much, Xilinx. And then the CNSL made 28, and that's basically the day for me. That was the day, 5K. In fact, on the rest of them, I basically lost money. Lost 400 on the BWA, lost 400 on the HSY. And this was a slightly big loss because it was a wild stock, so I took some slippage. And then the rest of them were just all small. Oh, the LKQ, there it is, but small, not a big winner. Those were my two main plays today. So the CNSL, let me just go ahead and show you that. It was off the 5 minutes. Check this out. Look at the beauty. Goes to the lows, breaks the low today, and basis. Oh my God. Tight stop, short, stop above, covered half, not sure where, somewhere here probably, and then the back half, 5 minute bar by bar, so over 08, 09. Was very, very nice. Because of the tight stop, it didn't need to drop dollars like the Xilinx did in order to make the big money. The smaller the stop, the more shares you can have, right? The smaller the stop, the larger the share size. So that's the formula for share size. Here's actually the formula for share sizing. Let me write it. Let me give it to you. So the formula for share sizing, I trust you can see at the bottom. So share size equals risk amount, however much you risk per trade, divided by stop size in pennies, let's say. In the case of Xilinx, doesn't have to be in pennies. In the case of Xilinx, it's in dollars because Xilinx was $1.60, the stop. This one was 5 cents. Small stock, of course. Xilinx is 100 closed at 115, but was 140 just yesterday. So this is what I do in the strategic day trader room, and I wanted to share this with you because we have an open house next week, so you can kind of get a glimpse of what we do on a daily basis and see if it's something that would be of interest to you. If you'd like to participate in trades like these, if you would like to make a lot of money, no promises, but I think I put you in a position to make really good money. Feel free to join me next week. Free. You don't have to put in anything, credit card info or any other information. There's a link in the description of the video. Just click on it. And I'll see you there on Monday. All right? Have a great evening. Thanks for watching the video. I hope you found benefit in it. If you did, be sure to click the like button. But more importantly, be sure to click on the link in the description for the open house information next week. Thanks so much, guys. Have a wonderful evening.